I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great.
In a recent interview at CNBC, Cathie Wood, the founder and CEO of ARK Invest, delves into ARK Invest's progress with the pending application for a Bitcoin ETF through ARK 21 shares. She also shares her insights on the projected trajectory of Bitcoin for 2024. As the cryptocurrency community awaits the potential approval of a spot Bitcoin exchange-traded fund in the United States, January marks a significant deadline. By December 29th, the community could receive news revealing which applicants among the 14 filed for a spot in Bitcoin ETF might advance in the initial wave of potential approvals. This development is widely anticipated to occur in early January. According to Bloomberg senior ETF analyst Eric Balchunas, the SEC wants to minimize the number of intermediaries in spot Bitcoin ETFs to make them a little more controllable. Wood says that engagement between ARK Invest and the U.S. Securities and Exchange Commission over its ETF application makes her believe an approval is more likely than ever. As the anticipation of the approval of a spot Bitcoin ETF finally comes to a head, the ARK 21 Shares Bitcoin Trust has made 16 significant clarifications and additions to its S-1 filing across several areas, ranging from operational processes to financial responsibilities and regulatory aspects, providing a more explicit, more detailed framework for the ETF's functioning. Wood anticipated a repositioning in the market post-SEC approval, anticipating a potential sell-off after an initial surge caused by anticipation. Let's now delve into the video to explore more. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
A spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it. I guess the biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head, hopefully, towards a resolution. I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation, a price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward. The biggest contributor is institutions as they move. They don't have to move very much in. They can move. There are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe.
Cathie Wood highlighted the proven reliability of Bitcoin, noting its emergence as a hedge against both inflation and deflation. In 2023, the U.S. witnessed the most significant bank failures in its history, while Bitcoin, commencing the year 2023 at just under $17,000, has experienced a remarkable surge, surpassing the $44,000 mark and positioning itself as one of the top-performing assets by the end of 2023. Argentina's president, Javier Milei, has unveiled a bold proposal to implement a favorable tax regime for crypto assets, marking a significant stride in the nation's approach to digital currencies. Despite the challenges, El Salvador's government remains committed to its Bitcoin strategy. Wood anticipated the potential for Bitcoin to become legal tender in more emerging markets. Let's redirect our attention to a video now.
Something happened this year that will continue to inform investor decisions. Bitcoin appreciated during the regional bank crisis. So as the KRE, the regional bank index, imploded and Silicon Valley Bank went under, Bitcoin appreciated in the middle of that crisis roughly 50%. And so we have a new role for Bitcoin, and that is not only a risk-on asset, but a risk-off asset too. Think about that. And why is it? It is because Bitcoin, unlike our banking system, does not face counterparty risk. It is completely decentralized and transparent by wallet address, right? And so our on-chain analyst, David Puel, can watch the network all day long and see movement and spot unusual activity. And we certainly saw that last year as Celsius was going under and others. It was Bitcoin that didn't skip a beat. So I really think it's proved its mettle. And that is informing institutions. They may not have liked it at one point in time, but that regional bank crisis spoke volumes. Now, so we look at Bitcoin as a hedge also against both inflation and deflation. So think about that. We have a risk-on asset and a risk-off asset. It's a hedge against inflation, much like gold is, because its quantity is fixed out there. And then it's a hedge against deflation because of this notion of counterparty risk, not subject to it. So it's going to play a lot of roles in a lot of portfolios. And, our forecasts are over 5 years, and over a 5-year investment time horizon, we do think that it will, for some people, take the place of physical gold. So that's a big mover. We also, as I mentioned, institutions will start with 0.1, 0.2, maybe going to 5% if our analysis is correct. That's what usually happens with a new asset class. And then we have the emerging markets. If you noticed, El Salvador and now Argentina, both of the presidents of those countries are supporting Bitcoin. And why? Because they've watched themselves and their populations, their purchasing power and their wealth being destroyed by bad monetary and fiscal policies in those countries. And that's not just true of those two countries. It's true elsewhere in the world. So we would not be surprised to see Bitcoin become legal tender in many more emerging markets. That will be another very big use case. And then related to that somewhat is remittances. It's easy to transmit once people have wallets and understand how to do it, Bitcoin for little or no charge at all, whereas going through Western Union can cost 8%, 10%, 23% in Nigeria, of even $100 as families in the US try and transmit or remit funds back to their families in emerging markets.
The first Bitcoin futures ETF in the U.S., the ProShares Bitcoin Strategy ETF, launched on October 19, 2023, saw a massive demand from investors, with crypto trading over $1 billion worth of shares on its debut day. The second Bitcoin futures ETF, the Valkyrie Bitcoin Strategy, launched on October 20, 2023, and also attracted significant interest, trading over $200 million worth of shares on its first day. Will the anticipated approval of a spot Bitcoin ETF attract investors? Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.